Good weekend, everybody. Here is your market minute for Sunday, the 29th of October. Now, in today's market minute, I'm going to bounce all over the place because there's a lot of conflicting messages that are in the charts right now. Literally, we could go either way from this point, and I need to kind of lay everything out so you understand where I'm going with this. So first of all, from a 5,000-foot perspective, here is the bear market that we went through back in 2022. So we started this bear really at the very beginning of 22, and to the very bottom of this in October, we were down about 27.5%. Now, we were not out of the bear until we broke above this level and started making higher highs and higher lows and started making a monthly swing to the upside. So this is where the bear was officially over at this point, and a new bull market was spawned. Well, that happened for about 2 months. And then since that point, we've had 3 months of a corrective pattern where we've dropped over 10% on the S&P. And now, quite honestly, is threatening to break into another bear. Now, when we have a small bear like this, a standard small bear, which is about 1.5 years long, this is what's called a cyclical bear market, cyclical. Now what I'm going to do is I'm going to zoom out to a period of time. This goes all the way back to the 20s and 30s on the S&P 500. And you can see these cyclical bear markets. So back in 2000 and 2008, we had bear markets then. We actually had some smaller ones, smaller horizontal ones showing up in 2015 and 2016 and 2018. And then, of course, we had our little correction with the pandemic, but that to me was not a bear market, even though it was more than 20%. But what I want you to focus on is this area here. This is what's called a secular bear market. We went nowhere for the better part of 2 decades, really, between 1995 and finally we released from this about 2013. And what I'm wondering is if we've started to go into the next secular bear market. The way that we would know that is if we've already gone through one cyclical bear market. If this turns into a cyclical bear market, then yes, we are into a secular bear. So what happens over the next month or so will really determine whether or not we are truly indeed going into another cyclical bear, therefore a secular bear, or whether this is just a really deep pullback and a really inconvenient time during a new bull market. So let's get into that. Here's the S&P 500 with a monthly, weekly, and daily chart set up here. And I find that this is very important that you zoom out and take a look at what's going on here. So if we zoom out, that we can see on the monthly chart where we've had this secular bull going for a long time, certainly since 2013, way back here. All of these are higher lows and higher highs. Well, guess what? What's this? This is a lower high. And if this fails, if we see this fail, and the way that this would fail would be the price comes up here to a lower high, rolls over, and transitions into a downtrend. That's what would have to happen for this. And then this becomes a much larger time frame, probably like a quarterly chart reversal, which is massive. So this could actually be very, very dangerous and may end up with much lower prices if this is true. So obviously the key to this is going to be right around here, and this is all going to happen in the next 2 months or so into the end of the year, is going to determine whether or not we are into the next cyclical bear / secular bear, or whether this is just a really deep pullback and, trying to get everybody thrown off of the bus before this thing takes off to the upside. So how are we going to determine whether or not this is heading for higher prices or lower prices? Well, what I've done here at the monthly chart is what I call rule number 1. Larger time frames dominate the trend. So we do have a larger time frame uptrend. And until that changes, then I'm not going to change my stance on the monthly chart. The monthly chart is still in an uptrend. What would have to happen to turn this into a downtrend, though? What we'd have to see is I doubt that we're going to see this turn into just drop off the highs. That is usually not how things go. What it normally does is we're going to set up a lower high and then transition to a lower low. That's how reversals happen in this market. So with that in mind, now what I need to do is to start looking for reversals. And I think we're pretty close. We were at just over 10%, like 10.9% to the downside here. So we're getting all kinds of signals. We're into exhaustion. We have an RSI 14 oversold signal. We're very, very close to finding that final capitulation. So we might start to get a bounce at some point in the next week or so. Now, what happens from here? Will we see the price? I'll zoom this out here so we can see this a little bit better. Are we going to see the price go from a lower low up to a higher high at 4,400? I doubt that. I very much doubt that. That's a long way to go, right? That's 300 points on the S&Ps. And I don't think it's got the energy to do that, although it's close. We may be, by the time we get to Monday, we may be printing an exhaustion signal on the weekly chart as well, too. So we could have quite a bit, but I just doubt it. I doubt that we're going to go straight up for 300 plus points. Typically what happens is whenever the bottom comes, so whether the bottom's at 4,100 or maybe as low as 4,000, we're going to get some type of a slingshot move back up to the upside. There will be one little piece of good news that the market's going to focus on. It doesn't matter what it is. This is what the market wants. The market will want to relieve this exhaustion condition. It will bounce higher from there. Now, the path to the downside will then be, we're going to bounce up to a lower high, and we're going to do the same thing that we've been doing here throughout all these moves. We're just going to roll over into a lower low. So this is the path that the market will take if it wants to continue on to this cyclical bear and turn into a secular bear. On the other hand, what will happen to change that into maybe a fourth quarter rally will be, we will get some type of bounce up to a lower high. It's at this point, and we may even start to drop. And this is where it's going to be really dicey. It's going to be very difficult to determine what's going on here. And then another piece of information, another positive catalyst will come in, and we're going to see this thing transition to an uptrend. So rule number 2 of fractal energy trading, reversals start from the inside out. So they start from the daily chart or even smaller than that. And then we're going to see this propagate to the weekly chart. So the weekly chart, if this is going to transition to an uptrend, will do the same thing. We're going to start to see this transition as well too. And then if we get this, the price above 4,600 like this, then we're back in business with the bull, because now we're back into higher highs and higher lows. So this is how you view the prices ahead of time. We're not predicting the future here. We're just setting up the guidelines for understanding what the market's actually doing so that we know what to do based on what the market does. And that's how we trade. You guys have a great weekend. We'll see you in the next one.